Hi, this is Dave and welcome to the weekly market video recap, closing out the week for Friday, April the 12th, 2013. I'm recording this video on Sunday the 14th. So let's just dive into these markets. We had a really strong, let me actually just change this chart. We had a really strong week last week, and in last week's video, what we were talking about was the potential, this potential as a pullback area, although I made it very clear that, this is the kind of pullback to the 21 exponential moving average and to, to a trend line where the two come together. That's the kind of area that I would normally be looking at as a potential, decent pullback for a swing trade. That being said, I made it very clear that I was not interested in buying the market, while it was up at these highs. So we did miss that trade, but we did identify that that would have been a good potential pullback area, and that's the kind of thing that we're normally looking for when we want to participate in this market. So that being said, fast forward to the close of this week, and we closed out the Dow at all new highs again this week. The Dow pushed above these highs and established new highs up and around this area. We closed out the week in the Dow Futures at 14,784, and then you can see the highs for the entire week. Let me just draw a line there. Were approximately 14,823. So we closed a little bit off the highs that we put in for the week, but we're at all new highs this week. The trend is still intact, and the trend is still, higher. So at this point in time, not really interested in getting short the market, but I'm not really interested in getting long the market either. So let's take a look at another point here, and let's look at the moves that we've been putting in here. Let's measure the move from this point to this point, and then project it off of this point here. And if we use that logic for the last swing from the low to the high moved about this amount of distance. So if I project it from this previous low, that could take us up to almost 15,000 in the Dow. So do I think 15,000 is achievable in the Dow? Sure. We're close enough there that that's, I think, going to be a fairly significant resistance area at 15,000. It's a round number, and psychologically, I think it's it's going to be a challenge point. So we'll have to see if we get up there. We're really close to it anyways, but we'll have to see if we get up there next week. And if we do, I believe the market is going to go a little bit higher. How high? Don't really know. So let's switch over to some other charts here. Let's look at the Dow futures, or I'm sorry, the S&P futures. So the S&P futures, we had the same scenario play out. Just going to extend this trend line here. We pulled back to that trend line last week, and we put in, new highs on the S&P. Everything looks higher. Let's take a look at the Nasdaq. If you can hear some noise in the background, that's my Boston Terriers. Apparently, they're as soon as I started my video, they decided to be ravenous, and I brought them into the office with me today, and they're eating like crazy in the background. So I apologize if you can hear that crunching in the background, and if not, then just disregard that note there. So the Nasdaq looks weaker than the other two indices, but you can see it. It broke out here out of this trading range. It broke out to new intermediate highs out of this trading range, came back down to retest it. Pretty good retest here on Friday, and then it closed significantly off of those lows. We're still below, though, these lows that were put in at the end of August, beginning of September 2012. So we do seem to be forming a nice little cup pattern here. So we'll be watching this pattern here to see if we kind of put in a handle and then break out of this pattern. So this is a pretty it looks pretty obvious to me, at least, pretty obvious cup pattern forming. So that's interesting. We'll keep an eye on that. Let's look at the transports if I can type in the symbol correctly. So the transports, you know, basically did the same thing as the Dow and the S&P did last week, where they pulled back to the support level on the daily chart into this, you know, sustainable sort of trend line. They spiked through it. They spiked back up. But the interesting thing is here, it looks like we put in a lower high here, and then it looks like we're set to put in another lower high here. So what I'd be looking for here to get back on the bull side of the transports, it looks like we're starting to, you know, establish a trend line here, or a triangle. What you want to see is, you want to see it contained in between these levels here, and then you want to see, in order for it to stay on the bull side, you want to see it break out to the high side. And if it doesn't, if it fails this trend line, then, you know, this is where we would be getting cautious, and this is where we would be getting bullish. So that's those are sort of the decision points. You've got like a wedge or a triangle forming. I believe that's more, I would classify that more of a wedge type pattern. So let's jump over into some other key markets. Let's look at the dollar index. So the dollar index is, you know, it's having some struggles this week, and it closed again right at this sort of line in the sand support, right around 82.35 to 82.50. It closed right in the middle at around 82.40. So the dollar index is still, it's starting to look weak. I mean, you had the 8-period moving average cross over the 21-period moving average right in around this area, but it's still holding this support level. And at this point in time, I'm cautiously optimistic on it, on the bull side, but it is starting to show signs of weakness. But it is, having said that, holding on to, you know, this sort of support area in and around 82.35, 82.50, closing at 82.40. Let's take a look at the euro then, see if the euro is giving us any other indications. So the euro here, we noted in last week's video that we were still bearish on it below $1.30, but we did note that it did break this trend line. So at this point in time, you can see it broke this trend line. It broke this trend line here, and then you can see it jumped, you know, above the 20-period exponential moving average. It jumped above $1.30, and it closed out at $1.3114. So the euro is a little bit more telling than the dollar index. The euro broke resistance. The dollar index is still holding on to support in terms of those key levels that we've been identifying over the last several weeks. So this trend line was broken, resistance was broken, we're back up above it. We're starting to put in some bullish patterns in the euro. So at this point in time, I'm the euro to me, the pattern looks clear. The dollar looks like you know, it's just holding on to that support area. It could fail. The euro could fail here as well. So we'll just have to keep watching this to see how it's going to resolve itself. This pattern to me is recognizable. The dollar, this is kind of giving us a heads up that the dollar may weaken. But that being said, you know, anything can happen in these markets. So in last week's video, I'm just going to jump over to another subject here. In last week's video, we were talking about this swing trade in the Canadian dollar, and it turned out that I thought I got long the Canadian dollar here, but what actually ended up happening was I ended up getting long the euro by accident. So instead of taking a trade in the FXE, the FXC rather, I took a trade in the FXE, which tracks the euro. So we just covered the euro, and you can see here, right in around this area, I got long. It was an accident. I was up in my position, but once I realized that I was up in the position, but that I actually had gotten into the wrong instrument, I just closed out the trade. I think I booked like, it was up 10% when I looked at it, and I think I ended up booking like 7% profit or something like that. So I got lucky. And unfortunately, now I'm out of the trade, and I didn't reestablish the FXC trade. But you can see here we're coming into some challenge points. You know, these kind of trading mistakes can happen from time to time. I was lucky enough to catch it, and I was lucky enough to actually just get lucky that the euro was reversing, and I was able to eke out a profit from it instead of making, you know, a mistake where you make a mistake and then you excuse me, lose money on it as well. So this is where I was interested in the Canadian dollar, looking for it to break this area and to come up and test somewhere up and around that area. So this is a move, you know, we still got a couple weeks left in this move. The seasonality ends around the 30th of April. So we'll be watching that, but unfortunately we won't be participating in it. So let's jump back over to the normal market analysis. Let's take a look at gold. Gold had a monumental, just a monumental break of support here. So we were looking at potentially holding this area here at 14, let's call it 1540, came back up, and then it broke through there like badly, just, you know, just decisively. And I think it was like probably down around 60 points or whatnot. And, you know, we came down into this level down in here, and we closed off of, you know, 1491. But we got as low as, let's see, we got as low as 1475, 1476. And we closed around 1500 even. So I think the intermediate support, that was just a bloodbath. You can see the volume. See how the volume picked up significantly? I'm looking at this as a potential support area as well. I can't really figure out where we have, you know, support down and around these levels. I'll have to take a closer look at the charts, but 1500 is a good round number. It was support. It was support going back in the past. It was resistance going back in the past as well. So, you know, 1500 seems the intermediate support, but at this point in time, you know, you do have signs, potential bottoming signs in terms of volume pickup, but you know, I wouldn't want to be getting on the long side, and I wouldn't want to be getting on the short side either. So there's just really not much, in my opinion, to do in gold. But this was just a pretty crazy move how it, you know, it broke this long-term support level after showing signs of strength, and then, you know, just, you know, a 60 point move to the downside. Actually, it was more. It was from 1540 to 1475 was about 25. Oh my God, it was like, geez, I can't even count. It's Sunday, so I'm having a hard time calculating in my head here. So you're looking at 1540. I should be able to count this in my head. I did actually pass, you know, high school. So, okay, 65 points. Okay, so 65 points to the downside. That was a pretty big move. Let's take a look at silver. Same sort of story, although ironically enough, gold looked actually weaker. But, you know, silver, same sort of scenario here. We talked a long time ago in one of the videos, probably going back, I'm going to guess almost 2 months ago, or maybe a month to 2 months ago, that we could potentially, if we continue the weakness, we could come down in silver and test this support level down here. That's exactly what we ended up doing. You know, fast forward that amount of time, that's what we ended up doing. We spiked through it, and we came and closed right around that level. So not really sure, you know, if that's going to be a support area or if we're just going to continue, you know, with more weakness. So let's take a look at crude oil. So crude oil is struggling here. We came back down and we tested this trend line here, and I don't really have much to talk about with respect to oil, but, you know, we're setting up like a triangle sort of pattern, and you know, we're setting up this wedge pattern, triangle pattern, and until it breaks out either way, we won't really know how it's going to resolve itself. So it looks like we're at the bottom end of support here. If we break through the bottom, you know, if we, let's say, do a partial advance, you know, we've got this sort of lower high in here, and if we kind of come up a little bit and we put in a lower high and break through it, then, you know, that's going to be telling of which way it wants to go, you know. And if we do the opposite and we break through the high side of this, then that's going to be telling as well. So we're sort of in the dead zone, and we just need to get direction on this market outside of that pattern. So let's take a look at natural gas. So natural gas has been really strong. You know, we identified this area as an area to trade, potentially to get on the long side. I would have personally been out of it in this sort of sloppy congestion area here, but you can see, you know, our original analysis, we were looking for a test of these areas, either these highs or these highs. That's kind of played out now, so I don't really have anything else on natural gas, but I will note that you've got this interesting sort of pattern happening here where you have this sort of, clean double bottom, and you're coming right back up to these highs. So if you look at this from a pattern perspective, usually a double bottom will, do something like this or like this in terms of the pattern. But what you also have setting up here, which I find of interest, and I'll be keeping an eye on, is this nice clean sort of cup pattern where you've got a cup here, and it'll be interesting to see if we find resistance in here, form a handle, and then punch back through. So we'll be keeping an eye on this chart. This is an interesting chart because even though this sort of move is played out, this is already done, we have another really decent pattern setting up here that we'll need to keep an eye on going forward. So we'll keep an eye on that. We'll cover that next week as well. Let's kind of wrap this video up. I think we've covered all the major markets. Let's look at the 30-year. We forgot to cover this in last week's video, but I think I sort of took my focus off of it because I basically said it looked like the government was, by the government I mean the U.S. Fed, which is not necessarily government, but the Federal Reserve, I believe, is is supporting the 30-year. They want to see interest rates at a certain level. They want to keep interest rates low. So they're watching these areas, in the bonds to make sure that they hold. So we identified some pretty decent support levels in the past that we thought would get broken. They didn't. What we were expecting to have happen didn't happen. And if you look at this this sort of scenario here, I had mentioned in one of the last videos that I covered the bonds. I said, be careful because it looks like they're being supported. So, normal technical analysis rules do not apply in this sense because it looks like, this market is being propped up. So, markets have been manipulated since the beginning of time, in my opinion. So the question is, are you going to complain about the manipulation, or are you just going to understand and recognize what's going on, manage your risk, and just play that game? Otherwise, if you don't like it, just get out. Nobody's forcing you to be in the market. So that being said, the markets are what are making the world go around, what make finance go around. So in a way, it does affect your life either way. So I can see why it can bother people from time to time, when they recognize that, hey, something's not right here. Having said that, though, recognize it for what it is and do the best you can. So, we're recognizing their support levels in here. If you notice, this trend line here got broken, and we had a really strong couple of weeks in the 30-year. So at this point in time, if you want to be in the bonds, I think the safe area to be in is probably the long side. Having said that, I'm not really interested in playing this sort of game. So, just be really cautious if you're going to trade the bonds, the 10-year or the 30-year or even the 5-year. Most people, I think, participate in the 10 and 30-year just because, when you get sold off to certain key levels, you're going to get probably somebody stepping in, pushing the market higher. So I guess the only way to really play that is to look for, the way that I would look at it is longs off of key support levels. So at this point in time, that's all I have. I hope this helps. I think I covered most of the major markets. I'm just going to flip over quickly to some of the to my Darvish squeeze setup to look to see if anything is really setting up here. And if you look at, for example, we did have a signal, a new Darvish squeeze long in the Dow, and you can see that, with the break of this Darvish box while we were in a squeeze, you've got potential targets, up around close to 1,500. If you look at the S&P, it also fired a Darvish squeeze long off of these levels here just recently. It fired when it broke the top of this Darvish box, and I think that's already almost reached its target. The Nasdaq has a Darvish long signal as well. I apologize; these charts are really hard to read. I'm probably going to reprogram them to take a lot of the text off of the chart and just to show the lines and the levels. So the Nasdaq has pretty much met its target when it broke out of this Darvish box. Its target was up here, and it's pretty much reached that target. So let's take a look at some other markets and see you know, if anything else is setting up. Let me actually just refresh this chart. View, refresh. Okay. So if we look at, for example, the 5-year fired, it fired a Darvish squeeze on the weekly chart. So let me expand out, a Darvish squeeze long on the weekly chart. So let me expand out the weekly chart, and you can see here the signal fired. We were in an elongated squeeze here when these dots were red. So this is basically a low volatility period, and the expectation is that the market is going to return to volatility. So we broke resistance of the top of the Darvish box. We had additional resistance at these highs, and you can see we're just sort of struggling with them for a little bit there. And you can see the MACD on the weekly chart is holding zero line support, indicator support. So the question will be, is the 5-year going to push up even higher? So wow, this is pretty crazy that the 5-year is at what looks like new all-time highs. And this is a weekly chart, so if I go back, to me it looks like it's at new all-time highs, which means the 5-year interest rates they should be at new all-time lows. So that's interesting to note. Let's look at the 10-year fired a weekly Darvish squeeze long breakout as well. This one's a little bit cleaner, where you can see here's your Darvish box. You've got resistance up and around these previous Darvish box levels, and you can see it's sort of hanging around there. But here's your Darvish box. You broke out with a squeeze, firing targets, up between 134 half, in between 134 and 135. So that's pretty crazy. That's pretty crazy. You've got some more potential upside there, and it's obvious that the powers that be want this market higher. The 30-year, we don't have any fresh signals, but you can see same sort of scenario. The market's higher. You did have an 8 period exponential moving average cross over the 21 exponential moving average on the weekly chart here, which is pretty significant. So that's interesting to note. Natural gas, you did actually have, let me just see here. It's kind of some strange signals. Let me just refresh this chart. You did have a long breakout here, but this was going back over to here. It's actually pulling off this Darvish box here, so I wouldn't consider that a valid signal. Excuse me. Let's take a look at some other markets. We had, from the Darvish squeeze perspective, that's a 1-minute chart. That's not going to help us. Let's just see here. So let's look at some of the metals. The UUP. Interesting. So the UUP, which tracks the US dollar, actually had a Darvish squeeze breakout to the downside on the daily chart. So let me refresh this chart to make sure these signals are valid. So let's see, the DXY had the same sort of scenario play out here. So from the Darvish squeeze perspective, we are in an uptrend on the dollar index, but we did fire a valid Darvish squeeze short. So we could get some lower moves in the dollar index unless this signal fails. So that's interesting, because if you look at you did have a signal on the daily chart, but on the weekly chart, you're at 8 exponential moving average support. So you would need to break the 8-period exponential moving average on the weekly chart, and that could bring you all the way down to 81.44, 21 exponential moving average support. So, at this point in time, we're at support. We did fire a signal, but, we'll just have to see how that resolves itself. So the UUP has a potential target here, according to this methodology, of 2208. So that's that's interesting. 2208 would bring you right around this 21 exponential period moving average on the weekly chart. So the daily chart signal, support on the weekly chart. So let's just take a look at let's see, the Australian dollar is setting up potentially on the weekly chart. It actually, on the chart, it actually fired. So the Australian dollar's looking like we could get a move on the weekly chart here with a potential target. This is interesting. So you've got a pretty well-defined weekly Darvish box, and it looks like you broke out at 104.8. You're below that now, right? But it's saying that you could have a potential target as high as $1.09. So that's interesting. We'll have to watch the Australian dollar, see if that actually follows through. And then let's see, is there anything else interesting setting up from the Darvis squeeze perspective? I don't cover this every single month. I do keep an eye on it from time to time. Let's see, the cable versus the CAD. I think that's a fairly choppy market, but it is saying that there's a potential breakout there on the daily chart with targets, up and around this area here, a little higher. So that's the British pound versus the Canadian dollar. Let's take a look at the grains. So the grains, oh wow. So the corn broke a Darvis on the weekly chart and had targets at 598-ish, and then we're just coming right back up into the breakout point. Soybeans, those are some pretty volatile markets. They were probably news driven. The soybeans are in a Darvis box with a squeeze setting up, so they're setting something up on the weekly chart. We'll have to look for direction outside of that Darvis box. The break of resistance or support. And that's all we really have. So I just wanted to cover that quickly. That's all we have this week. I hope it helps. Stay tuned for a meetup coming up next weekend. We're going to be getting back to basics in order to advance and move forward. I did a presentation at the Oakville chapter of the CSTA on this subject last Wednesday. It went over really well. We had over 20 people at the meeting. A lot of positive feedback. I appreciate that for all who were there. I'm going to whittle this presentation down significantly in terms of the look. The content will remain the same, but it'll be a little bit easier to absorb because it was a 2-hour presentation. So I'm going to try to tighten it up a little bit, and hopefully we'll find it of value. I'm going to schedule the meetup either tonight or tomorrow, so stay tuned for that. And thanks for tuning in. And have a great rest of weekend, and I'll look forward to seeing you at a next meeting or at the next video update. Good trading and be well.